Alright, we're at Accounting Principles Document 2nd, Volume 2, Final Report, 1987, Chapter 7, Asset Valuation Related Expense Principle. Statement as assets should be valued at either the value of resource foregone and either the required asset, the government accounting auditing principal cost, and the current market value, depending on the regulatory application of the method of valuing assets, and each of the applications should be determined. The casualty principle, where the government accounting auditing principal cause responsible cannot be viewed with a meaningful regulatory measure of the value. The measure of the value may be used. Explanation: valuation assets, but the integral part of determining the cost of the railroad-related activities used for determining the movement of the cost and result with the operation of the return of the investment. The asset valuation important the element virtually all regulatory application becomes as forms the basis of measuring the amount of value resource detected with expended with the railroad-related activity. Asset valuation serve as the basis calculation return of the investment in form depreciation expense and the return of the investment in the form of the capital cost of the capital. The calculation of each of them apply with the specific movements and as well as the entity as a whole. The Railroad Accounting Principle Board concluded that no single asset valuation method appropriation for all regulatory applications, different time orientation, specific regulatory applications require different valuation methods. Additional practical problems associated with the current certain valuation methods, particularly using a certain regulatory application. The principle therefore represents the framework selecting the appropriate evaluation method of the basis on each of the specific regulatory application time orientation. The casualty principle identifies on how time orientation influences the determination of asset valuation method. See page 10. The Railroad Accounting Principle Board considers the 5 issues related to the asset valuation, time orientation valuation method, deferred tax credits, investment base of the appropriate historical cost method, depreciation accounting restatement of the track assets and excess of access assets and write-downs. Or your time orientation valuation method. The alternative, the Railroad Accounting Principle Board serves the alternative method of valuing the asset classified into 2 broad categories: historical cost and current market value. Of the historical cost category, acquisition predecessor cost. With the 2 alternatives considered with the current market value of the category, the reproduction cost, replacement cost, and net liquidation value. Where the alternatives considered historic cost is measured by the asset value with the monetary value with the resource sacrifice required by the asset acquisition cost amortized by the estimated useful life of the railroad related service of net investment is an asset of the asset value to reduce the cumulative accounts amortized. The 3 methods of measuring historical costs are compared on the page 45. Reproduction cost is the current market value of the identical at the same use of the condition. It represents the interest of the value of the firm would pay for the purchase of the asset the use of today. Market value is made estimated with either use of the direct quotations of the observation price indices, indexes, and used assets. Replacement cost of the current market value best is asset available. Use the assume the function of the existing assets. Replacement existing service potential with replacement cost. The value of the assessed value of the operating the expense must be adjusted for the account and change for the operation. Advantage of the replacement cost must be used to either the direct quotations or indexes of the new asset price. Net liquidation level. The NLV. Their net liquidation value is not reasonable proceeding with the ordinary disposition asset. The existing value would represent the funding available other investment opportunities. The net liquidation value may be estimated either by the use of the direct observation independent appraisal. Analysis of an alternative and noted with a single valuation methodology appropriation regulatory application. However, the argumentation supports each of the methods presented with the select the appropriate validation method described in the specific regulatory application section of the chapter in part 2 of this volume. The argumentation regulated with the alternative valuation method of the 7 categories: practicality, verifiability, objective, the opportunity with cost measure, compensation, price level changes, capital requirements, simulated competitive markets, and predictive ability. Practicality and for certain regulatory applications for revenue, adequacy, and the government purposing costs, general purpose cost system, historical cost is practical for the current market value with the historical cost prepared presently with financial reporting purposes that is readily available. The current market value methods require preparation of computation with additional information with either 1 not feasible or 2 not cost effective, not with cost effective to obtain the entire entity. Further, certain other regulatory applications, such as maximum rate, preceding abandonment, surcharge of the preceding minimum rate, and proceeding with the current cost of the permit, are more practical. General preparing additional analysis to accurately for these applications, in particular, because they only with the portion firms, assets, operations involved. The description of the feasibility with the cost effectiveness of the consideration follow. Feasibility for the revenue adequacy of the general purpose of the cost system. The application review of the current assets required the real cost of the capital to be prevented with a double recovery for the price level change of maximum rates competitive with the access proceeding do not require the real cost capital rate to prevent the double recovery because of the price level changes are explicitly be included with the discount cash flow or DCF. Method is separate item of the value with which contestable minimum low rate and long canon factors proceeding generally do not require the use for either the capital or asset value. For given level of the risk without regard to the inflation of the real capital cost of the capital return to the investor, the real cost of the capital is not observable in financial markets because of the effect of inflation can only be estimated with the removal of the investor's expectations regarding with the price level change with the nominal observed rates. Although the numerous methods of estimating the real cost of the capital that has been proposed, none appear provided with sufficient reliable results. Chapter 6, page 36. Thus, the calculation of accurate, stable, real cost capital appears infeasible. Cost effectiveness. Use of the current asset values requires a certain adjustment to be made, but the additional depreciation expense to perform these adjustment accurate requires a significant time to expense, and such expenditure is not warranted by every regulatory application. Using the replacement cost, they have asset valuation reported operating expenses based on the existing assets violates the data integrity casualty principle. The operating expense does not represent the use of the replacement asset, therefore do not reflect the causal relationship of the asset used to establish the replacement cost of the best asset available to perform the function of the existing asset. The best available presumable include the improved technology efficient. On the other hand, with the reported operating expense result for the use of the less productive assets. Economic accuracy achieved with adjusting existing operating expenses, the income account with operating efficiency replacement, especially developing an independent expense estimate operating expenses associated with those assets, the adjusting of the assets considered the present value with any of the operating advantages, except with a certain specific narrow applications. Each of these approaches is difficult to develop and troublesome to verify. Reproduction of the cost adjusting existing asset value to match the current market value of the identical asset. Market value may be established by each of the direct observation through the use of the indices with the direct changing values. However, the entity-wide basis, the direct observation must be costly and time consuming. Alternatively used indices must be often suggested with the most commonly efficiently established market value. According to the research, however, the use of indices were the two practical problems. First, application involve the investment base for the categories to assume that all assets in the investment base are currently used and useful. The extent of the investment base includes the excess and the underutilized assets and indices applied to each entire investment result for the proportional grade of the other over a statement and operating costs of the investment base that occurs in the acquisition costs. Alright, second, some have the question of the use of the indices of the estimated reproduction cost. Freeman Willis of 1984 noted that the use of the indices presently implemented frequently measure the cost of new assets, thus they may not properly represent the effects of the technological change. Alright, with the other two current market value with alternative net liquid value and the wide base appears impractical. The only accurate method for the measuring net liquid value is to estimate the value of each for the asset. Preparing the estimate for the form of the whole may prompt prohibitively costly. However, the application that requires existing value of the specific railroad asset, the practical purpose problems they may be less significant. Verifiability and objectivity. The historically cost generated with the verifiability objective methods measuring the cost asset for the current cost. The historical cost determined through the support of the transaction is governed the government accounting auditing principle well-defined set of the principles. Use for the current market the values generally unless for the verifiable determining depends on the expert of the both subject of the judgment with the prayer for the use of the price level indexes, the adjusting the historical cost of the market value for the one solution of the subject of the concerns. However, the use of the indexes may result in the subjective problems associated with their construction and compilation of practical problems associated with required adjustment and operating expenses. Additionally, it may be difficult to demonstrate linkage between them items used in the construction indexes and specific assets of the firm are to be adjusted. All right. Opportunity cost measures are certain regulatory applications such as abandonment surcharge, a maximum rate, long cannon factor to decide with the basis of whether the activity that is issued is responsible for comparison to the best alternative activity. The best alternative activity, the opportunity cost associated with the decision not to pursue it. Net liquid value represents the most accurate asset of the value determining the opportunity of the cost between the representative of the purchaser assessment with the assessment asset's economic potential alternative activity. Net liquid value is effectively determined by the asset with the certain circumstances of the productive capacity assessed the great demand with the net liquid value approximately replacement of reproduction in other circumstances such where there is no other demand with the asset productive capacity. The net liquid value may represent the scrap value. Usually, historical cost is constantly a valid estimator of the net liquid value. Compensation of the price level change. Many regulatory applications may object to the presiding of the enterprise for the opportunity to cover the operation expense for the cost capital provided with the prudent investment that accomplishes the objective of the firm must be able to cover through the price decision effects of the price level change, the inflation and deflation. Asset recovery may be accomplished with valuing the estimated depreciation charge for either two methods using current value of the combination with the real of the price level adjustment cost of the capital, the historic value of the combination with the current nominal cost of the capital, using the current value of the asset combination, real cost of capital, conceptual are attractive between the producing, provides the industrial specified price level change with the degree of the price level change experienced may vary for the industry more over the including the price level change of the asset specific to the industry, implicit incorporate the specific price level change of the necessary to provide investment reinvestment assets. Using a historical value of the assets combination with the nominal cost of the capital provides with the general price level change. The general price level changes are implicit portion of the current nominal cost of the capital rate. The investors are compensated with the general price level change for the cost capital rate. Our capital requirements. Argument with favoring the current asset evaluation that will provide with the capital adequate to replace the asset for the enterprise for the augmentation with the underlying the assumption the funding with the reinvestment must be generated internally by the entity, not outside investment can be attractive to. Essentially all assets will be replaced for the funds provided by the operation and advance for the replacement. First assumption is not valid. Investor responsible or reasonably expected to earn the competitive return in such case for the funds can be obtained with the capital replacement. Second assumption appears to be invalid in light of the recent significant railroad activity. Writing down and impaired with the accessing asset write-downs had sufficient funds with the provided with the operation for the write-down of the railroads. Roads, when they be left significantly surplus of the capital to be invested. Alright, simulated and competitive markets. An argument using the current market value to represent the price constraint with the competitive norm. The competitive norm establishes the upper limit of the price base for the economic cost, including cost capital and experience for the new entrant. New firm change charges more new entrant cost for the new competitors enter the market. The price will driven to a point of the equilibrium at the supply is increased. The simulation of competitive market may often used to identify for the specific movements of relations of specific assets, not necessary usually regulatory account applications practically whether the object is different from the fact that preclude certain practical considerations as discussed above under practicality. Alright, predictive ability. The certain regulatory application permit the action to be taken of the effects of the future provision of the service, the future prices to be charged for the service. Current assets is argued to be better prediction of the cost of the incurred, but the best for the update, therefore the better machine feature of the price, preventing the future expenses. To the extent of the technology, inflation rates measure remain reasonable, stable. Historic cost measures also have several accurate predictors and future cost of current asset values. Do not provide better matching of the future price of the future provided with the expense for the automatically expense reported the subsequent years of the future financial reports of the government auditing accounting principle will represent the combination of the existing new assessment, the predictive accuracy of the existing either current cost or the historical cost method related to the time requirements of the search of the new assets. All technology consists changes associated with the new assets required adjusting of the operating expense to accurately predicted with the total effort. Fact. Deferred tax. If the Railroad Accounting Principal Board concluded that the funds provided with the deferred taxes have zero economic costs and the protection of the railroad assets fund with the deferred tax if they're provided with the government non-debt holders investors, and if the government does not charge the interest of the deferred tax loan required railroad incur the capital costs associated with the portion investment base for the deferred tax credit. The deferred tax should therefore be deducted for the asset bases. By the end of 1984, the deferred tax credit represented the source of the funds for the financial of the 16.3% with the $58 billion of total Class 1 railroad assets and past. The interstate commerce has treated the deferred tax credit as having the same weighted average cost for the capital as funds provided with the Debt Act within December 31st, 1986. Decision ex parte number 393, sub number 1, standard of the railroad revenue adequacy. The Interstate Commerce Commission reverse its position in the future at inadequacy determined elected to treat the deferred tax credit as having zero cost for the capital subtraction of the deferred tax credit from the investment base. Resolving the treatment of the deferred tax, the Railroad Accounting Principal Board considered three questions. Should the deferred tax be recognized? If so, what should be occurred with the deferred taxes? What are the methods of deferred taxes should be reused? Recognition of the deferred tax. The two methods of the accounting of the deferred taxes have been proposed. The Railroad Accounting Principal Board, comprehensive of the interior period of the tax allocation method required with the Government Accounting Principal Board through the flow through the method. The comprehensive interior period of the tax allocation method of recognizing deferred taxes may be applied with several different ways. Follow through a method ignores the deferred taxes entirely, includes the limit interior period allocation of expenses, such as depreciation and actual taxes paid by the railroad and reflected in income. Advocates a comprehensive interior period of the allocation method to cite the treatment of the accumulation of depreciation to explain the support of the recognition that deferred tax expense the tax are based on the income generated assets over the useful life. The recognition of deferred taxes are attributed to the individual assets appropriate. The contingency is applicable to deferred tax if the non-different being used the other areas of accounting to support the contention of the advocated site with the going certain with the concept of the government accounting auditing principle accepted with the continuation of the present tax system. The supporting recognition of the deferred taxes support with the fact the individual transaction plan with the light of the tax consequent claim that acquire the benefits expratiated with the depreciation dependent on the customer and flow through the would circumvent in the event of the Congress of providing accelerated depreciation finally through such recognition of deferred taxes site with the compliance of the government accounting principle. Alright, some of the advocates flow through part of point of the income tax result of the tax income with the net book income, linking the tax expense with the pre-tax account with the income result of the pre-representation of the economic nature of the income tax, and further deferred the tax liability really contingent of the future income of the future tax regulation. Railroad Accounting Principal Board, in pursuit of argumentation in favor of the comprehensive and interior period of the tax allocation, referred the recording deferred taxes reached with the conclusion of the basis: 1. The role of the tax consideration play in the investment decision; 2. Congress' intent with the stimulated investment; 3. The conformance with the government accounting auditing principles. On September 2nd, 1986, the Financial Auditing Accounting Standard Board issued a proposed statement of the financial accounting standard, the accounting with the income tax, the proposed statement with the retaining the requirement of the comprehensive interior period of tax allocation of the proposed statement would measure the effect of the income tax liability method placed for the deferred method currently required by the accounting principal board. Opinion number 11, accounting for the income tax and the motion for the cumulative income tax statement then will not correspond with the balance state sheet account assessment amounts that have been resolved by the accounting principal board. Opinion number 11, even though they might be in this particular year within other as an important difference of the regulatory purpose of the liability method would require immediate adjustment of the deferred tax liability to reflect the effect of changing the tax laws and raised proposed statement would be effective with the financial year beginning on after the December 15th, 1987. The permits the company either restate the previously issued financial statement, include the competitive effect of applying the statement of the net income for the year of the initial application. Magnitude proposed change with the greatly increased with the change of the effective July 1987 within federal corporate and incorporated change rate of 46 to 34%. The change effect of the deferred tax credit that has been accumulated with the 46, 48 or other percent rate, but will be liquidated at 34%. The Railroad Accounting Principle Board generally includes the deferred taxes computed in accordance with the government accounting auditing principles, including the changes for the consequently Railroad Accounting Principle Board. Deferred taxes were computed with the regulatory purpose of the proposed statement when it becomes effective. The Railroad Accounting Principle Board has not, however, considered that the cumulative effect of applying the proposed statement should be treated with regulatory purpose. The alternative methods proposed by the Financial Accounting Standards Board may not be appropriate for the regulatory purpose of the issue left to the Interstate Commerce Commission. The cost of deferred tax. The three alternatives recognized deferred taxes proposed the Railroad Accounting Principle Board ultimately method, financial method, weight of the average equity method, the utility financial method, along with the additional DCFs method disclosed below. Value of deferred taxes, interest, and the free source of the capital, the weight of average of debt, the equity method, implicit value of the accumulated deferred taxes, and the weight of the average cost of debt equity. Advocates the utility to finance method raised for three primary judgments. First, Congress intended to stimulate the investment, permitting the accelerated depreciation to be used for the tax purpose, even though the method for use for the financial report resulting deferral of the tax payments the government provides for the investment consistent with the Congress intent. Second, deferring payments without interest. Represent the interest free of the loan with the government, although such a loan cost of the government and no cost of the railroad. Even if there are new existing competitors would have no similar interest to the free funds available, the competitive market with the competition would force them to the firm to pass on the reduce the capital of the customer. Advocates weighted average of the equity method raised the primary arguments. First, the Congress intent with the stimulate the investment will not be met since the firms will not invest in that they are permitted to earn the return of the funds provided with the deferred taxes. Second, investors will competitive markets expect to return on all assets. Railroad Accounting Principle Board concluded the cumulative deferred tax credit should be treated with a zero of the capital of the competitive market of the firm would not be forced to regulators on the pass of the customer with the benefit of zero interest of financing. However, the firm may be complied with the competitive circumstances to pass the benefits with the customer. Or a method of treating deferred taxes at zero cost. Two alternatives with the recognized deferred taxes and interest free source of the funds of financing method of the utility method. Under the financing method, developing industry-wide cost for the capital rate adjustment method recognizing cumulative deferred tax credit zero cost component of the method would violate the casualty principle because the railroad would differ materially in extent with which they are able to finance investments through the deferred tax credits. Alright, under the utility method, deferred tax credits reduce the eligible investment used by the cumulative deferred tax credit. The railroad accounting principle concluded reducing the historical investment base and applicable deferred tax credits is a practical approach with the revenue adequacy of the government purchasing cost system. Additional alternative to the DCF method is used the multiple year analysis. Because it does not account for the reporting the convention and interfere with the allocation and assessing the consumption of the non-taxes are allocated. Using the DCF method consistent with the utility method since tax is consequently asset, the expenditure reduce the net investment of the analysis of the DCF is used for the standalone cost. Deferred taxes are always zero since their method only includes the tax actually paid during the life of its investment. One party urged the Railroad Accounting Principle Board to adopt the financial method of abandonment surcharge of the application of reason, but the casualty principle required the opportunity for the cost of abandonment the surcharge cases reflect the treatment of the deferred tax at zero cost. Since the Interstate Commerce Commission applied for the pre-tax of the cost capital rate, the net liquid value determined the abandonment surcharge opportunity cost of the cost capital rate should be adjusted with using the financing method such as deferred taxes may be reflected as zero. Alright, the Railroad Accounting Principle Board rejects the aggregation contrary to the complementary parties' assertion. The casualty principle would include the financing method of the specific application. No casualty links exist between the deferred tax entry and entire entity or the deferred taxes related to specific branch line asset. The Railroad Accounting Principle believes the proper treatment of the deferred consistent with the casualty principle that recognizes the tax consequences associated with the specific branch line asset, so that such treatment may be accomplished with adjusting that liquid the value for the tax consequent of the gain or loss for the disposal of the branch line assets. This is actually the quite long one. Appropriate historical cost method. The railroad accounting principle includes the government accounting auditing principle costs for the business combination represents the superior method of measuring the economical accurate cost, but then using historical cost methods in business combination qualifies the pooling of the interest and is kind of the uniting the ownership of the interest of the two more companies exchange equity security. No acquisition recognized because of the combination accomplished without the disbursing the reach of the constitutes the ownership of the interest that continue with the former basis accounting of the retained with the record assets, the liability carried forward with the combined corporation of the previously recorded amounts. Business corporation generally treated with the purchase of accounting with the GAP as the acquisition with one of the company acquiring the corporation required the fair market value of the required assets, less liability assumed as the cost records the assets and with the cost of the acquired company. Over some of the fair value of the tangible identified with the intangible assets, less about liabilities as goodwill. The Interstate Commerce Commission determines the rulemaking of the government accounting principle of the cause to determine the proceeding of the regulatory result. In certain situations, the example to express overvalued market value primarily result of the government action over the regulatory policy and need within other measure for such predecessor the modification. Are your alternatives? The Railroad Accounting Principle Board considered three alternative measures for the historical cost should be used the acquisition cost, the government accounting auditing principle cost, the predecessor cost. The Railroad Accounting Principle Board defines the acquisition cost lower as the aggregated purchase price of the firm value of the tangible intangible asset at the time of the business combination, with the excess of the aggregated price for the firm over the fair value as assets concerning with the goodwill not included with the investment base, nor would could it be amortized being net operating income. Alright, the Government Accounting Principle Board acquisition is defined in the connection with the purchase organization pool entry of the Government Accounting Principle Board book value of the pooling entity, the narrowed accounting principle with the opinion of the Government Accounting Principle practical alternative to acquisition term cost of the firm's presently maintaining accurate record of the basic financial statement presentation of the analysis below the theoretical arguments favoring acquisition also applies to the Government Accounting acquisition the Government auditing accounting principles except for the business combination treating with the pooling with the government accounting auditing principles. Predecessors represent with the cost of the person devoting the property to the public service. Alright, analysts and alternative the Railroad Accounting Principle Board consider the following arguments in their selecting with the Government Accounting Principle Board. Cost economic accuracy, capital attraction, replacement cost, approximation, comparable treatment, windfall earnings, and practical verifiable. Economic accuracy, using the acquisition of or the government accounting auditing principle cost better represents the economic conditions facing the enterprise. There's the predecessor cost because the large share of the industry revenue is determined with the competitive market rather than through the regulatory process. A substantial portion of the railroad traffic is no longer subject to Interstate Commerce Commission maximum rate regulation because of it falls below the jurisdiction threshold, exempt from the movements under the contract implementation when most rates are set by the competition maximum rate value used as set the base primary competitive economic conditions of the regulatory processes. The use of the predecessor cost has been adopted by most public utility commissions to procure upward downward manipulation asset values. However, the predecessor's cost is appropriate only if the market value is established predominantly through the regulatory process. The market value is determined in the regulatory process when the regulatory enterprise sufficient marketplace, such as a material portion of the rates influenced by what regulators apply. Alternatively, the market value of the regulator's enterprise could be driven to the depressed levels of improper regulation. However, the supporters of the predecessor cost for the point out would be illogical or circular to set the rates based on the acquisition cost base. And so doing the rates would be not dependent on the value which is determined based on the rates. For those of the government accounting auditing principal costs would have the used directing relating making regulated enterprise most sufficient for market power. The rates material effective with the regulator allows to consider the large share of the railroad industry revenues determined by Competitive markets and the Railroad Accounting Principle Board concerned the circular properly unfounded at the time also supports predecessor costs for the lower acquisition value of the primary due to the impact of all the regulations, including the revenue adequacy maximum rates, car hire, merger, and etc. Not primarily excessive assets suggest these concern the asset valuation related with the expense principle provides that the other measures values may be used. The government accounting auditing principle cost reasonable cannot be viewed meaningful regulatory measures of value. Our capital attraction. Primarily, the objective of the SRA is to assist the attaining of the revenue adequacy. The accomplishment of the objective of the investors must be permitted to earn the market return of the investment as long as the investors staggered rail act to assist the railroad in revenue adequacy. To the accomplish the objective, the investors must be permitted to earn the market return of the investment as long as the investors can rate of the return comparable to other market rates of the return on investment, comparable risk that would come into the investment. Use of the government accounting auditing principle costs consistent with the objective of enabling railroads and either to attract the capital with the replacement of necessary assets. The railroad assets will replace the long competitive returns allowed with existing new investments of the using of the predecessor cost for the higher acquisition costs assumed for the funds replacement and the generated advance for investment. However, the investors reasonably expect the earn the competitive return with the capital return attractive required for the accumulation of the funded advance for the reinvestment and not necessary. I still got 4 more pages to read this one. Alright, replacement cost approximation. So, some of the argued predecessor cost of the replacement because of the replacement cost of the railroad goods greater than the predecessor of the acquisition cost. The predecessor cost of the greater than the acquisition cost of the experience of the effective railroad. The assertion is not universally true, but is observed by many other industries, and the predecessor cost is easily be lower by the government accounting auditing process costs. Some of the argued that any of the change of the original cost in ABS asset basis will produce a result with the differ for the replacement cost investment modes with the static investment models made and used to demonstrate the replacement of the cost investment base and used in conjunction with the real cost of the capital rate, producing the results identically achieved with the use of the original predecessor of the cost investment base in conjunction with the nominal cost capital rate. However, the argument does not recognize the certain evidence that take place with required recognition of regulatory assessment measures. For example, the changes must be recognized with the permanently underutilized earnings. The impaired assessment usually should be valued higher of the net liquid value of the present value of the net cash flow, with those the cash assets can generate the presence of the use success with the redundant assets should be eliminated with the investment base. In purchase of the transaction, government accounting auditing principle cost implicitly the permanently underutilized earnings impaired with expense redundant excess for the higher net liquid value, the present value of the net cash flow for the excess can be generated at the present use. The valuation results from the marketplace sufficient measure for the underlying with the economic value of the valuation appropriately underutilized earnings impaired with the asset, the valuation lesser predecessor costs, effectively improperly including the excess of the assets of the assessment base and minimized. Comparable treatment and consider the alternative approach to the assess of the valuation of comparable assets should be comparable treatment such that the treatment practical under acquisition cost of all the assets acquired with the combined with the value of the either the fair market with the regardless of accounting with the method of the required with the value of the assets comparable to government accounting auditing principles. On the other hand, consider the assets acquired from the purchase with the combined with the pooling with the represents essentially different the transaction, thus the assets not comparable with the trio given the comparable treatment. However, the railroad accounting principle board believe the practical considerable are greater than importance with the comparable with the circumstances associated with the pooling sufficient difference within warrant different accounting treatment. Similarity, the permanently impaired assets should be accorded in comparable treatment whether the assets are written down involuntary through the sale of reorganization or voluntary where the involuntary written down with the excess assets of the occurred as part of the purchase reorganization. The use of the predecessor cost effective notifies the effect of the written down unless the assets are voluntarily written down at the later date. However, in such a case, the railroad has a benefit to the inflated investment base until the voluntarily write down is taken. The other hand, the voluntary write down of the assets may be a railroad management recognizing and assessing assets, reducing net valuation is issued by the associated loss recognized with the earnings for the revenue adequacy purpose of the Interstate Commerce Commission. Determines the government accounting auditing principal cost appropriate for the particular regular application for the interstate commerce to achieve the comparability may find it necessary to remove estimated excess assets over the predecessor cost. Alright, windfall earnings. Permitting the competitive return of the investment greater than the actual made with the successor provided the entity with the opportunity to return the greater than the cost of the capital with the windfall is not guaranteed. The representative of the opportunity was not available to the investor. Competitive enterprise the return of the regulation rests on the presumption of the current certain monopoly powers that must be held within check. On the other hand, the government accounting auditing principles purchase the accounting with investor payment more than the book value of the successor railroad enterprise may be allowed to charge higher rates than the competitive shippers than under the predecessor costs. Alright, practically verifiable. They would not consider explicitly augmented by the exposed draft. They particularly data interchange integrity principles directly affect with the selection of the and historical cost method. Many of the commentators were concerned with the particularly verifiable in using acquisition process of the pooling in light of their concerns with the railroad accounting principle board to decide the addressment practically verifiable with the three alternatives explicit. Some commentators stated that applying the acquisition the cost of the assets acquired with the pooling and subject with the revised and extensive with the judgment that noted for the absence of the purchase transaction notice with no record supporting the transaction price. Furthermore, reliance for the market valuation time of the pooling and the cause of the valuation fluctuating wildly because of the violated with the equity of the markets. Commenters also rated the concern for the merits of applying with market value with the valuation of both parties and pooling stated that such applications result in different measures resulting from the purchase with which only the purchase parties revalue. The government accounting principle represents the most practical, verifiable historical method because of the records used to support the same the use of the current method maintain the records and the support of the financial account with the printing the pool with the railroad accounting principle for the practical problems associated with accounting costs. The predecessor cost requires the maintenance and separated predecessor cost with the required record currents maintained under the Interstate Commerce Commission on the basis of the annual submission of the railroads. Our depreciation accounting and the restatement of the track assets, developing economically accurate cost virtually all parties endorsed for the use of the annual expenses prepared with the accordance with the government accounting auditing principles, recognizing the need for the adjusting government auditing principles generated the capital cost of three elements for the capital cost of evaluation, capital asset basis. Method of recognizing annual expenses for the consumption of the assets, the return of the investment, the annual capital charge with required recovered or return of investments. The Interstate Commerce Commission has introduced the depreciation accounting in its stages. The railroad had been used for the depreciation accounting in either the R1 reports of the Interstate Commerce Commission before 1983. Railroads used the replacement retirement board method for the accounting with the track structure unity until 1986. The Interstate Commerce Commission retained from the using of the railroad retirement board method for reviewing revenue adequacy. The government purchasing cost system by returning the railroads to furnishing supplementing the railroad retirement betterment data in December 31st, 1986, the decision ex parte number 303, standards of railroad revenue adequacy, and to the ICC amendment the using Railroad Retirement Board, Railroad Retirement Betterment Revenue Adequacy Determinations. Under the Railroad Retirement Betterment method, the acquisition cost for the investment recorded the books as well as non-predictable assets, non-depreciation expense taken out of the estimated useful life, while in the replace for the assets similar quality, the entire cost of the replacing is charged with the operating. Dispense only the increment and better portion of the new asset is added to the books. The best assets assessed retired with the acquisition cost of the original investment, including the betterments that are charged the expense. And the evaluation of the RRB and the Railroad Accounting Principal Board then notes the problem and shortcoming impaired with the attractiveness of the railroad retirement betterment. Under the certain Inter-Commerce Commission, the procedure with the railroad must maintain a report on two separate set of books of track assets. To continue the use of the railroad retirement and betterment with the revenue accuracy with the purpose of no longer conform with the government accounting auditing principles. While some of the more sensitive inflation of the depreciating accounts of the railroad retirement board does not accurately measure the cost of the estimates consumed with providing the services of the asset base devoted with the railroad services. Under the depreciation accounting method, many of these shortcomings either they are non-applicable or can be overcome. Some of the railroads converted with the depreciation accounting with the financial accounting with the R1 reporting purpose of the depreciation accounting and the revenue adequacy determination alleviates the need for the second set of books to support the railroad retirement betterment. The depreciation accounting is consistent with the government accounting auditing principles. While not so sensitive inflation used, the depreciation accounting reduces many of these concerns with the inflation when used the nominal cost of the capital rate. As a result, the depreciation accounting restatement procedure for the industry pattern with the track replacement, the difference between the return on the investment measured for using the railroad retirement betterment board and the depreciation accounting are not significant. The railroad accounting principal board concluded that depreciation accounting is more economically accurate. The Railroad Accounting Principal Board considered the second issue regarding the reinstatement of the track asset value, the conversion of the DA appropriate with regulatory purpose, essentially reinstatement of railroads treating existing tracks, existing with the previous expense with the railroad rehabilitating time that has been capitalized depreciated with the preceding result, substantial increase with the depreciable deferred tax credit retained in the earning of the reinstatement material amount of approximately $7 billion added to the asset base. Railroad Accounting Principal Board had several conclusions in the analysis. The reinstatement was certain that the track assets because should charge the second time the operating expense over the remaining life of the assets. Charging the expense of the twice does not necessarily indicate that the railroads will receive dockable double recovery of the payment from the customer. The restated asset base for the future operating expense for the same railroads had also been used for the depreciating accounts for the track structure. The Railroad Accounting Principal Board concludes that the depreciating accounts with the reinstatement of the track assets more economically accurate with the certain parts of the question of the fair part of the permitting the railroads to opportunity to recover the sale of the billion tracks resulting from the reinstatement determination appropriate with the alternative regulatory purposes was arrested in the Interstate Commerce Commission, which should review the intermediate public participation with all interested parties. Excess asset and write downs. Since excessive assets investments based on the inaccuracy of the return on investment and the depreciation expense calculations, all commentators agree that those assets should be identified and eliminated from the asset base of identified with the two different approaches for the consideration reliance with existing professional accounting practices, Securities and Exchange Commission's guidance, and the regulatory study of the investment of investigation of the base of the Railroad Accounting Principal Board believes the first approach is inadequate. There was W.E. Patton or A.C. Littleton in their introduction to the Corporate Accounting Standards 1970 pointed out that if it had become apparent that the effective service life of an asset has been seriously curtailed with the unexpected obsoleteness and other specific factor, the accrual depreciation of the date of adequate recognition for the additional cost consideration should not await the actual retirement to the postpone. The special write-down of the situation would be mean avoiding the recognition of the loss already suffered would be least likely to be paid on an operating charge for losses of the future. Thus, these assets should be written down whether the earning capacity permanently impaired, whether these cases for the economic useful. The write down with the treated with loss and should be clearly reported in the income statement. The write down with the impaired assets and consistent with the Security of Exchange Commission's requirements of the sum of the discounted future cash flows will be less than the net book value or assets recommended with the general accounting principle. Similarly, traditional regular model recognition with the assets being impaired, but therefore by the net investment base of the and continually review the purge the investment base assets not useful. However, the contrast professionally accounting of the principle requires scrutiny, write downs, and determining whether or what manner of recovery should be allowed. Both approaches have a certain degree of the subjection mode with regulatory investigation believed not impracticable. Investigators do not financially interest out of the partially may not result in material improvement in accuracy. The low exemption of the improve the accuracy combined with the material higher costs. Regulatory investigation favors concluded the reliance professional accounting principle of the Security and Exchange Commission guidance. For example, the voluntary write-downs railroad industry numerous in 1986. 5 larger railroads wrote down nearly $2 billion in assets. Before these write-downs, the railroad industry had maintained no material access capacity existed, and the extent of the material access capacity still exists. The industry should identify and eliminate it from the investment base. Railroad Accounting Principal Board also concluded the write-down of excess related assets operating with the income the appropriate professional accounting practices rigorously. However, the Railroad Accounting Principal recognized the determination of the asset valuation issue for the sum of the alternative to non-government accounting auditing principal valuation methods such as predecessor costs most seriously affected the certain assets. Moreover, the small improvements in accuracy may be material. Further adoption of any of these alternative methods would require, therefore, additional analysis of the treatment excess of assets. Applications effect of the asset evaluation related to expensive principal affects the specific regulatory application addressed by the Railroad Accounting Principal Board. Chapter 8 Productivity Principle.